Welcome back, ladies and gentlemen. In this video, we're going to be doing a quick review on the NASDAQ futures, some of the price action from October the 21st, 2025, you guys. But before we get into this video, I have to tell you guys that I am not a financial advisor. Any information that you hear in this video is not financial advice. This video is purely just me showing you guys some of the trades that I took to make some profits in my phase one account, right? So let's get straight into this video. All right, let's get straight into this video, guys. One of the first things I want to show y'all, let's go look at the weekly time frame. All right, so if you guys want to learn how to find the right direction in the market, one of the first things you have to do is start on these higher time frames, right? So on the weekly time frame, what we have up here is we have this big wick on the weekly time frame, and we have failed to take this high out on this weekly time frame, right? Now, one of the things that makes this weekly candle special is that this is a bearish engulfing on the weekly time frame, right? So this one big red candle right here broke out of the previous weekly low and high, right? So that made a bearish engulfing. And the reason why that is important is because if we fail to take out this high that was made on the weekly, then we can typically expect to see some movement back down, right? Based on this weekly time frame. So what I would do then is go to the daily time frame and then try to figure out a daily bias, right? So like I said, we already know from the weekly time frame we wasn't able to take out that weekly high up here. So we took out yesterday's high, right? So we already know, right? There's only two things that can happen if the market breaks out of a daily high or a daily low, right? There's only two things that can happen. Either A, is going to continue to go either higher or lower, or B, is going to make a reversal pattern and come back down deeper into that candle, right? And that's pretty much what I was looking at today, because we broke out of yesterday's high, but we already know we couldn't get through the week high, right? So that only leaves us one direction for the market to go, and that's going to be to the downside today, right? So let's look at the 4-hour chart real fast, you guys. All right, so you guys can see right here, this green candle right here is the 10 a.m. candle, right? So this is the 10 a.m. candle. If we're looking at the 4-hour time frame, there's clearly some things we can see. We can see a little bit of a fair value gap in here. And then we can also see a order block right here, you guys. And then this red zone that's on my chart is this 4-hour order block right here, right? So we've been dancing inside of this 4-hour order block since yesterday around 11 a.m., right? So now I'm going to drop into the 1-minute time frame. I just wanted to show everybody that. Right now we're going to drop into the 1-minute time frame. Okay, so I'm going to put a vertical line on the 925 candle. Right, so we can always know where the market opened at, right? So as you guys can see, market opens right here. The market pulls up, take out some of this liquidity, instantly falls down, creates a first presented fair value gap. Now, if you guys don't use the first presented fair value gap, I recommend definitely start to use it, at least to read price, right? You don't have to use it to take trades with it or anything like that, but you should be using this at the bare minimum to read price. And I'm going to show you guys why in just a couple minutes, right? So, and remember, the first presented fair value gap is the first fair value gap that is formed after 931, right? There's other first presented fair value gaps as well. Like if you was trading in the New York evening session, it will be 131, right? The first presented fair value gap at 131. But right now we're talking about the New York opening, right, for the morning session. So it's going to be 931, and after is you're going to look to see a first presented fair value gap, right? So the reason why I have to keep on stressing that is because I know a lot of y'all probably don't use that, right? But I just want y'all to just at least test it out, right? At least test it out. But this is where I first got my first trade as the market climbed back into here. And if I go to the 5-minute chart, I'm going to show you guys another thing that made me get inside of this trade on the 5 minutes, so you guys can see this is right after market open. On the 5-minute chart, we had this bearish engulfing candle as well, right? On the 5-minute, right? See right here, this is the 930 candle. So we had a bearish engulfing, we had first presented fair value gap. That's pretty much all I needed to, take this sell, because I had this first presented fair value gap from yesterday, right? And I was, in my mind at least, I was like, I wanted prices to honestly go lower, but in my mind, I was like, this can be a first target, right? And if you're using, this high as a stop loss, which that's exactly what I did, right? You're going to put your stop loss right here. And if you're targeting this for a profit, that's a 3-to-1 risk to reward ratio, right? So I did make a good trade. That was like one of my first trades right there. And then price eventually came back to it again, and I took the trade again. And the only reason I took the trade again is because, as you guys can see, we failed to hit this first presented fair value gap from yesterday, right? The price went just above it, and then it went all the way back to retrace, took out this little bit of a swing high up there, and then continued to the downside. Even this time, I didn't hold for full take profit, right? I got into this trade, and I was out of there, right, for profit. But, I wish I would have held, but, hindsight is always 20/20, right? I'm just trying to show you guys. So sometimes, you guys, I will take a trade from the first presented fair value gap, right? It's not all the time, but as you guys can see, right, if you guys remember in the beginning of the video, we started this market in a very key level, right? And we already know that, at least I can't say that we knew, but we already was kind of like knowing that price wanted to go down. So sometimes when the market is cornered, and then the first presented fair value gap happened like the way it did today, there's nothing else for the market to go up above and take out, right? Sometimes I don't like the first presented fair value gap because, you can get chopped up, right? If there's some liquidity resting above here somewhere, or if there's a, something that the market wants to get to, it could very well go up there and take out those levels first before coming back down, right? Even if you wanted the market to come back down, right? So that's something to keep in mind. But just look at how the market respects this first presented fair value gap all throughout the day, right? Literally all throughout the day. So how I would use it, to read price, I have like a rule that I made up for myself. Like, see all of this price action right here? When the market is just chopping around the first presented fair value gap, I don't take a trade. All right, that's kind of like a rule for myself, right? So, and then we had the market come all the way up here, right? I really wasn't worried that it was going to take out the all-time highs. I was already anticipating this to be a fake out. So I should have been positioning myself in here. But as you guys can look at, if you guys look at the time, you will see that it's 12:50, right? So I typically don't like to trade from, 12 to 1:30, right? I typically don't like to trade from 12 to 1:30. So this is why when the market broke down on the 5-minute, it made it seem like it was officially ready to run, right? And I was looking for a target all the way down here because this is the opening range gap, right? And then we also have a new week opening gap that was resting down here. This opening range gap has not been touched at one time, right? So I was anticipating for the market to drop down into here today. So when we got this little drop off right here, I took some sales right at the first presented fair value gap, and then I got chopped up. I literally got chopped up all the way into the market closed, and then I was able to get out for break even on that trade, right? But I will be honest with you guys, that trade was very horrible. Initially, I had my stop loss inside of here because I wanted this to be a breakaway gap. But after, seeing the tug of war for a little while, I instantly knew that the market was going to come back up here. And then I moved my stop loss right here. But as it got closer and closer, I didn't trust this stop anymore. So I had to eventually put my stop to the only stop that I can fully trust, which was all the way up here, right? The all-time highs up here. So, as you guys can see, I didn't get stopped off, but I mean, I didn't get stopped out, but I did have a really horrible entry down in here, and I had to sit through all of this down draw before they finally gave me a little piece of the move that I wanted. And this was literally, the last like 1 minute of the day, right? So, that was pretty much today's price action, you guys. As you guys can see, this isn't really a trending market, but one thing I do like about ICT concepts is that even outside of a trending market, like even when the market is consolidating, you can still find some good trades, right? Using these concepts. And just to, tell you guys again what the concepts that I like to use, I mainly like to use, new week opening gap, opening range gap, first presented fair value gap. And then from there, not even from there, but like that's after the main thing for me is daily bias and liquidity. Like those are the main two things. If you just can figure those two out, you really don't need an order block. You really don't need a fair value gap. You just figure out where the market is going and figure out, okay, is it actually targeting equal lows, right? Because that's another thing that's different. You got to know what type of liquidity is going to be more powerful than other types of liquidity, right? If you're targeting a liquidity zone that only has one swing high or one swing low, then it's not going to be as effective as targeting an actual liquidity pool where there's like two swing lows or two swing highs. And I'll give you an example on a 5-minute, right? Because I actually have some levels marked out over here that's already ready. So for an example, right, like this level right here, you see how these are equal lows right here, equal lows? This is an actual pool, right? Think about the letter U upside down, right? This is an actual pool of liquidity. So the market, even right here, these are some equal lows on the 5-minute. This is an actual pool of liquidity, right? So the market loves to target those things a lot more than just one swing low or one swing high, you guys. So daily bias, liquidity, those are my top two things for anybody to learn if you're going to be using ICT concepts. Then I would say always use the new week opening gap, new day opening gap, opening range gap, and then obviously the first presented fair value gap. And only use that because the market respects it way too much for you not to use it. And it's like, just in this one example, y'all can see how much the market respected the first presented fair value gap, you guys. So don't take my word for it. Just use it to at least learn how to read price a little bit better, you guys. So that's going to be the video. Also, one last thing, you guys, make sure to use code KRACKEN if you guys are going to go out there and purchase any prop firm accounts. Remember, I am affiliated with Trade Day, Apex. I am affiliated with E8 Markets, Funder Pro, Think Capital, Alpha Capital, you guys. If you guys are going to go and purchase any prop firm accounts, make sure to use code KRACKEN. Also, like this video, subscribe if you haven't already, and I will see y'all in the next video. Peace out.